Good morning, afternoon, and evening, everyone. Just as everyone comes in, let me share my screen. Welcome to the live trading session here at Trading Vault. I hope you are all having a great day. If we could just please do a quick audio visual check, you should be able to see my VT Markets account there with sort of an Aussie dollar, US dollar screen. Perfect. Thank you very much, Branislav. And obviously you can hear me now as well, which is great. Okay, guys. So yeah, look, welcome to the this live trading series, live trading session. I know a lot of guys have been asking for this. A lot of you have been asking for this in the feedback. So I think it'd be a great opportunity just to put. We've only covered a few of the topics. We've covered some of the fundamentals. So I'm going to put some of that into practice and show you how I sort of go through my charts and stuff like that. And you can obviously ask questions as we go through. But whilst we just give it, we won't spend too long because I think there's going to be a lot to get through in this session. But just for a couple of minutes while a few other people join, if you just introduce yourself, let us know where you're coming in from today, and also sort of like what your experience is in trading, where you're at with your trading. As always, there will be that short survey at the end of the session. I'd really appreciate your feedback, any topics that you'd like covered, so that we can really tailor this to make sure that you get the best education that you need. But just a little bit about how today's session is gonna work. So when I sit down, I've obviously it's 10 o'clock here in the UK. I normally sit down before the European Open session and do my charts and stuff like that. So I have actually gone through this sort of process this morning. Um, Now, if I went through each and every single pair and instrument and stuff that I look at, we would be here much longer than an hour. So what I'm going to do is we'll cover gold because I know a lot of you are very keen on gold. That's a topic that comes up quite a bit in the feedback form. So we're going to cover gold, but I don't actually have a level that I'm looking to trade on gold today. And then we're going to cover, I've got sort of 6 or 7 levels that I'm looking at today. So we're going to go through those. And what I'm going to do is going to go through each process. So I'm going to plot my zones. I'm going to talk you through why I'm choosing those zones as an area of interest, and then I'll start placing some orders and stuff like that as well. Obviously, what I normally do is when I go through them, a lot of the charts I can just skip through because there aren't opportunities there, and we'll go through 1 or 2 of those maybe as well. I don't want to spend more than about 30 to 40 minutes going through this sort of process because as I say, there's a lot to get through. And then after that sort of 30 to 40 minutes, I'm sure there's going to be a lot of questions. You can ask questions about what I'm thinking, why I'm thinking that, anything that it's not too clear. Then please do just let me know. And then likewise, if we do have any time at the end of the session, if we have sort of 5-10 minutes at the end, I'm happy to run through some charts that you guys want. You know, if there's anything that you want me to analyze and give you some levels, then that'd be great. But so yeah, good morning everyone. Good. So we've got Mexico, Malaysia, UK, Orpington, UK. Yep, just around the corner from me as well. Genius. Nell, you're saying no sound. Okay, just if I can just confirm that everyone else can hear me. Okay, I'm assuming people can. Um, Norway, Reunion Island. Good stuff. India, London, Philippines, Madrid, yeah, South Africa, all over the world. Brilliant stuff. Okay, it says the sound is low. Let me just hopefully let me just sort my microphone out there a little bit. Hopefully that can be a little bit better. Good stuff. Right, okay, so let's crack on with this. Now, the way that you're going to trade and the markets you're going to look at and the times and stuff like that is going to change and vary dependent on sort of time frame on your style of trading. Okay, so you know today we're going to be predominantly we're going to look at one sort of 5 minute chart that I look at, which is like very much lower time frame day trading, but we're also going to look at sort of like some 1 hour and 4 hour charts and levels on them. And fundamentally the process is exactly the same. and what I'm looking at is exactly the same. It's just on a different time frame, and therefore I'm going to be adjusting the size of my stops, the size of my targets, due to the movement that is likely and the volatility is likely on the different time frames. But as you'll see, the actual process that I go through is fundamentally the same, whether I'm on a 5-minute chart, a 1 hour chart, a 4 hour chart, a daily chart. The actual process that I go through is exactly the same. So what I want to do first is I'm going to look at Aussie dollar first, because this is the lower time frame level that I'm looking at today. Okay, so we're going to put on our indicators. We're going to put on our where is it? We want our average true range. There we go, average true range. We're going to put this on so that we can see our average true range. And again, for those of you, if you're not haven't been to the previous sessions, the average true range is something that we use to try and determine the width of the zones of support and resistance that we're going to look for. Okay, and you can see that in previous session in the recordings of previous sessions. So you can see here that the average true range is around sort of 13 pips, something like that. So we want to divide that by 2, and that gives us the average sort of. Sorry, this is on the 1 hour. So we want to go to the 5-minute. Apologies. So we're going to go to the 5-minute chart. And you can see the average true range here is about 8 pips. So we want to divide that by 2, and we've got 4 pip zone. So we're going to insert an object here, and I'm going to show you what I'm basically looking at. So we're going to draw a zone. We're going to make this zone 4 pips wide, because as I say, we've got the average true range is 8 pips. We're going to divide that by 2 to get the average width of our zone. And we're going to make that just 4 pips. So 65.16 to 65.20. So it's pretty much 4 pips anyway. And we want to just extend this out a little bit. Okay. Excuse me, sorry. There we go. Okay, now, as you can see here, I'm going to just scroll out a little bit. And this is exactly the area that I was looking for on Aussie dollar. You can see here that we've got a clear resistance that we've touched once here, touched twice here, touched 3 times here, touched 4 times here, and then we've had this big impulsive. You remember, we go back to that impulsive corrective price action. So we've got this impulsive move here. This was actually on the back of the RBA rate announcement this morning. So we've got a really big, strong push up, and we've seen acceptance, and we've seen this sort of like clear move above what was resistance. And what I'm saying, when we see a really strong impulsive move above a previously strong resistance zone, we know that these areas often want to be revisited and retested, because there's areas of liquidity there. We know there's areas of liquidity there because the institutions have reacted from there multiple times. In fact, they've actually probably reacted from here as well. So you're talking 4 or 5 times. We know institutional order flow sits there. We know there's liquidity, and therefore it is likely to want to be retested. So I therefore have an area that I want to act as support. We've got this really strong impulsive move. We've now got a corrective move. And if this market moves back down into this area, then I want to be able to buy it. And the reason that, I'm going to exercise patience and I'm going to wait for the market to move back into this area rather than, buying in this sort of area here, is if we just think about it from a risk to reward perspective as well. Okay, if we see this move, what a lot of traders think is like, right, I want to buy it. And they see this move and they already feel like they've missed out on all of these profits. So they start jumping in to the trade in this area here. But if we're being realistic, if we're going to be buying in this area here, and let's just zoom in a little bit, because we can see now that we know that this is the area that we want to buy. If we're buying here, we know that the market needs to come back down to this area at some point, or not needs to, but could possibly come back down to this area at some point. So we still need to have our stops below here. So if we're buying in this area here, we still need to have our stop below here. And if we're going to target back up towards the top of this this spike, we haven't really got a very good risk to reward trade. It's probably about 1-to-1, maybe even a little bit less than 1-to-1. However, if we wait for price to come back down here, okay, and we enter at this zone, we can still keep our stop there. We now can target anywhere in sort of, we don't even have to target back towards the top of this. We can target somewhere back in here, and we've got a multiple R trade. Okay, so naturally straight away, by exercising the patience, we're getting a better trade location, we're getting a better risk to reward trade, and therefore increasing our profitability. So that is why we want to wait and only trade from the key zones of support and resistance. Okay, so what I would do then is I've identified the zone. I know that I want to buy. So now all I need to do is I've got the area that I'm going to buy. I'm going to buy at this sort of the top of this zone here, which is 66.20. Sorry, 65.20. I'm going to have my stop below that zone. So it's a 4-pip wide zone. So I need to have my stop below that zone. So I need to add 2 or 3 pips below that zone. So it's going to be like a 6 to 7 pip stop. Okay, and now what I can do is I can calculate my lot size. So I'm going to use a generic. There's plenty of these on the internet to calculate your lot sizes. This one is FX Verify. As I say, there's lots out there. We're going to change the instrument to Aussie dollar, US dollar. My currency on my VT Markets account, as you can see, is US dollars. We've got 100,000 account balance. Now remember, my stop size is going to be 6 to 7 pips. So I'm going to use 7 pips. I want to risk 1% of my account. I calculate that, and it tells me that my lot size needs to be 14.286 lots. So we can round it up, 14.3 lots, because we're in and there about. So that's 14.3 lots. And now all I literally need to do is new order. Oh, excuse me 1 second. Need to add symbol here. Bear with me 1 second. So I can actually trade that. There we go. Okay. And from here, it's very simple. Okay. We've got our volume, which is 14.3 lots. We are going to change it to a pending order because we're going to use limit orders in this instance. Our stop loss is 7 pips, so 6513. And our target, where is our target going to be? Now, I'm going to use a target around 60, this sort of swing, low here, maybe this sort of swing low here. So 65.29 to 65.36. I'm going to use, let's do 65.34 because that will be a 2-to-1 target. Just need to put that volume back in, which was 14.3 lots. And then we place the order, and now you can see that's it. I've got my order there. I've got my buy limit there. I've got a stop here, and I've got my target up here, just below that sort of swing low there. So, and that is basically very simply how when I identify a zone, how I'm going to go through the process of identifying my entry, my stop, and my target. Now, there are other ways that you can do this. If you're not comfortable placing limit orders, you're not comfortable with necessarily your price action reading at that time. What you may want to do is you may want to look for a candlestick reversal pattern or some other form of entry, and that may be part of your trade plan to look at a specific entry or, like I say, a candlestick pattern, engulfing bar, pin bar, 3-bar reversal, any one of those sorts of different things. And we'll cover those sorts of patterns and that in another session. But if that's the case, you've still identified the area of the market that you want to buy from. And what you will do then is you just insert an alert. Where's the alert button on here? We can add an alert here. Where's the alert button? Excuse me for a second. Alerts. Okay, so create an alert, and is that gone? Excuse me, I've lost that. There we go. Alert editor. So we've got Aussie dollar, US dollar. No expiration on it. You want the bid price around 0.6522. Okay. And then you click on that, and then that will create an alert, and that will alert you once the price gets within 2 pips of that area, and then you can come back to your screen and you can look then for your reversal pattern, or your entry technique once it's entered that zone, because you've identified the zone that you want to participate from. If the market doesn't move into that zone, then you don't trade. If the market moves into that zone, then you have a potential trade opportunity. Okay, so right, let's have a look. How would you programmatically adapt an ATR-based stop loss and take profit system in MT5 that dynamically adjusts based on both changing market volatility and time of day, particularly during news events or low liquidity periods? So, Ash, are you asking how I would like? Because I mean, if you're going to create an algo for that, you would need to speak to a programmer. That wouldn't be too difficult to do, because you get them to change based on the idea. It will read the ATR to then adjust its take profit and stop loss based on the ATR level. If you're talking about how I would do that, just generally speaking, from a trading point of view, naturally, really, all you're doing is monitoring this ATR when it comes to entering your trade. And as volatility increases, that ATR will increase, and you will naturally calculate your stop loss and take profits based on that. If you want to come up with a sort of mechanical system for it, then again, the thing we have to really be aware of in trading is that it would be very easy for me to sit there and say, this is what I do. But that isn't the only way to trade. You've got to, yes, it's a guideline, but you've got to adjust it to suit your style and your needs and everything like that. I mean, personally, I'm using sort of like, so if that zone is 4 points wide, I'm adding sort of another 50-ish%. So 4 points divided by 2, you're looking at sort of 6-7 pips. That's sort of what I'm going through like just in my head and as a thing. So because this is quite a tight zone, 4 pips, I'm going on that exaggerated part. But some people like really tight stops, and they're really happy to take a lot more losses because they're going to get better risk to reward trades, because they can go for bigger risk to reward or reward to risk options. So I mean, if you're talking about like creating an algo, you need to speak to a programmer, but it would be very easy to do to calculate the ATR. So the chart program is MT4. This is MT5, Denise. But you've got it's the same process and everything on MT4, on TradingView, on many other sort of platforms and stuff like that as well. So yeah, the process is exactly the same. I really like TradingView. I use TradingView a lot as well in my trading for my charting. And yeah, it's a really good platform. So it's the same process. So how would you avoid overfitting or false signals when ATR shrinks or spikes erratically during consolidation or fake breakouts? Okay, so that's a really good question, Ash, again. So we're going to talk about false breaks, liquidity grabs in not so next. The next session in 2 weeks, we're going to talk about trend trading, and then the session after that, we're going to talk about liquidity grabs, false breaks, and things like that. I mean, look, when you're trading these limit orders, if something happens, there are going to be times when the market spikes erratically, and you're going to become victim to some sort. You're going to take a loss. Okay. What I have found quite often than not as well is if the market spike exaggerated, like so if there's an exaggerated spike on the back of something that happens, often as long as these zones are quite some distance, by the time the market moves down into them, the market's a little bit exhausted and you get a reaction from them anyway, because there is liquidity there. So actually there can be some really good trade locations from these zones on exaggerated spikes. And again, we can talk about how to identify when those sort of spikes could be exaggerated and that in future lessons. So there's still a lot to cover in future sessions and stuff in regards to a lot of this as well. Okay, cool. So that's your Aussie dollar US dollar trade. That's a 5 minute trade. So is that called order block? Very similar to order blocks, Joseph. I don't use order blocks myself. I know a lot of people that look at them and stuff. Personally, that it's very similar, but all I'm really doing is I'm identifying institutional order flow through support and resistance. Often it's quite similar. But this is just a much more visual way of being able to do it. And order blocks are very different, or like slightly different. Okay, so that's the Aussie dollar. Like I said, I'm aware we're already 20 minutes into the session. We've only covered one trade at the moment, so I'd like to get moving on if that's okay. So let's have a look at gold, because I know that a lot of people like gold as well. Let me just see. There we go. Right, so let's get this one on. Okay, so I'm going to scroll out to sort of like a one hour time frame here. Okay, and let's just scroll out a little bit. Okay, so ATR is, we're going to go sort of like around that. It's about sort of 12 to 14. So we're going to be, again, we're going to be using sort of $6 to $7 wide zones. So we're going to insert an object, rectangle. We want it to be $6 to $7 wide. Again, let's just move that out a little bit. Where's that gone? Bear with me 1 second, guys. I don't know where that disappeared to. Again, it's a six. Using that ATR, we're going to make that $6 wide. Why is it doing that? Excuse me. Sorry, I don't understand why. That keeps disappearing. Right, third time lucky, hopefully. No, I don't know why. Okay, we're just gonna have to draw it in here like that. No, I'll have to just stay there like that rather than extending it. Let's just still make that $6 wide. Okay, there we go. So straight away, I can look and sit there and go, okay, that area there is an area of support. We've got it acting as support here. It breaks through, acts as resistance, breaks through, and is acting as support. So again, 3 of the last 5 times, going back to when we was looking at the zones a few weeks ago, we're looking at probabilities. So 3 of the 5 times, 60% of the time in recent price action, that has acted as support. So that is an area of support that we could potentially look for. Now, there's other areas on this chart. We've got a really clear swing point down here of support. Okay, that's a little bit wide. We said it could be sort of $6 to $7, so I'm going to make that one $7. And then if I was just to let me just show you a little bit here. Actually, I'll just use this one as as a guide. So if we was to move this up, okay, you can sort of see areas where there are other reactions. So you've got moves through, but it's acted as support here, acted as support here, moves through, acted as support here, moves through, moves through. So it's not very clean, okay? And these reactions are quite weak. So I'm not really interested in that area as a place to trade. And again, once we start coming up to this area here, we've got support here, bit choppy price action here, resistance, moves through, moves through, moves through, support, moves through, has acted as resistance again here. But notice again, it's just very unclean and very choppy, so it's not an area that I'm actually looking to trade from. Other than that, there's not really anything here on gold that I'm really looking and wanting to trade. Okay, we've got an area of support here because it's one key touch and it's been a really, really strong reaction. But ultimately, this is potentially the only real area that I'm looking to trade from. And one thing that this is sort of, again, a little bit more advanced. But once I see the market come into that area there, I want to see the market push back beyond the previous swing high before I will look to trade that zone again. And the reason being, if it puts in a lower high, then we are potentially the buying pressure from that zone is becoming less, it's becoming weaker, and we're potentially looking at a pre-breakout structure, which we're going to cover in the next session. But notice, so one thing that you can do here is you can go, right, that's the previous swing high. We've almost got like a double top. We haven't taken that out. So I'm not looking to buy this level until price moves back above this zone. So if the market comes up here and then comes back down into that area from there, then I may look to buy it. But at the moment, all the time that price remains below this level here, we are getting a double top in this case, or a series of lower highs, and therefore I am not looking to buy that zone again because we've already had that reaction from that zone. Does that make sense for everyone as to why at the moment I'm not looking to trade that gold zone? Okay, cool, good stuff. Right. Okay, I've got a request to change the colors of the candlesticks. If it's okay, Dorothy, I'll do that for the next session rather than doing that right now. Just because, like I say, I'm really conscious of the time at the moment, and I want to get through as much of this as possible. Would you combine ATR with other indicators also, or do you prefer keeping it as simple as possible? I personally like to keep it as simple as possible. I think we do tend to overcomplicate trading, especially in the learning phase and in the beginning phase of trading. I think, I spoke about this previously. As I have progressed as a trader, certainly as an independent trader, my charts have got a lot cleaner. I use a lot less. I focus much more on price action. And I would say that is the same for the majority, the vast, vast, vast majority of successful traders and profitable traders I come across. They all say exactly the same thing, that as they have gained more experience in trading, their charts have become a lot cleaner. They rely more on price action. So you can use some indicators to confirm probably your entry points and stuff like that. But I think that it's a really fine balance to not clutter up the charts. If you so the way that you may want to use an indicator, for example, is once price, say this was a zone that you wanted to buy from. Once price enters this zone, you want to see, the stochastic below 20 and turning up before you buy, or something along those lines, or a MACD crossover before you look to buy. And that's how you would use the indicator. So you would use it as an entry technique, if you see what I mean. Ash, I mean, again, if you the ATR is purely a guideline to try and work out how wide your zone should be, and therefore how wide your stop should be. If you're then starting using confluence of different ATRs, then you're varying the amount of the stops and stuff you need. If you're sitting there saying, can you use multiple time frame zones? So if this is a 1 hour zone here or on gold, but if we was to look at a 4 hour chart and we identified a 4 hour zone and it was in the same area and that's added confluence, 100%. You should be you can definitely use that. Be careful not to overcomplicate the process and look at too many time frames, because that really can create that analysis paralysis. But if you can identify a 5 minute zone and that ties in with a 1 hour zone or something along those lines, then yes, 100% use that for confluence. Hi, Javed. So yeah, again, so if using limit orders, going back to that Aussie dollar trade, where's the Aussie dollar? Going back to the Aussie dollar 5 minute chart, you can use limit orders like I have done there. So as soon as the market ends that trade, then you look to buy and you put your stop below that zone. So let's go through a couple of other examples, and hopefully that will clarify a little bit more as well. Yeah, exactly. Right. So a couple of other things, a couple of other ones that I'm looking at the moment. So let's look at crude oil again. I know this is a market that a lot of people like. So here we've got an area here. This is a trade that I'm actually in at the moment, but you can hopefully see why if we can just go right. So you can see there ATR is about $2.20, something like that. So we're going to divide that. We're going to have like a $1.10 wide zone. So let's do 67.90 to 69. Okay, so it's quite a wide zone. A lot of this ATR is created because of this volatility that we had at the beginning of last month or during last month because of the war in the Middle East. But you can see here we had resistance. We had this big push through when I think that would have been when Israel started the attack. That would have been the 13th. Yep, that's the 13th. So that's when Israel attacked Iran. We came back, we retested it, pushed back up. Then we had, this was when Iran attacked the US bases in the Middle East, and it was clear that it was a de-escalation. It was a choreographed response to be able to de-escalate the situation afterwards. So we saw this price move back down. So we've got this impulsive push down in an area which has shown to have great liquidity, and then we stayed corrective afterwards. So it's again impulsive corrective move afterwards, and then we had this level here at what level is that again? That is 67.90. So you're going to enter sort of 67.90, 6800. You're going to have your stop above that level. So again, if you've entered at 6900, you are going to have your stop at $70.50, because you're going to take that $1 wide zone and then add 50%, so it's $1.50, and then you can target back down here. So again, let's see if we can do the calculator. We're going to have $69. It's going to have 70.50. If we change this to pips, we're going to have 150 pips. So it's 0.67, 0.7 pips basically, 0.7 lots. Sorry, 0.7 lots. So again, place the order. So I'm actually already in this order but just to show you how I would have done it. Pending order, sell limit, 0.7 lots. Price $69. Stop loss 70.50. and we're going to target sort of back down towards here. So that's around $66. So again, a nice 3-to-1 trade. And you can obviously put expiration dates in on this as well if you want to for the if there's news coming up. So there's no news today, but if there was news coming up, you may want to not place that trade in and around news, so you can set an expiration date. And again, it's fairly simple. Once you've actually identified the zone, the process, hopefully you can see, is relatively simple. And again, you may look, you know, looking at something like this, once the price moved into that zone, if we go down to an hourly chart, you could have looked for, I don't know, 1, 2, 3, like three lower low reversal, like a 3-bar reversal or something like that. Or we're gonna talk about some reversal patterns over the next couple of sessions. Or if whatever your trade plan states, you could potentially look for some form of entry technique as soon as you enter that zone. But me personally, just because I'm a little bit more advanced, this is the way that I would just enter blind. And again, so going back to this, when I very first started trading as an independent trader, I was looking at reversals and patterns and stuff like that. It's only been over the last sort of 5 to 6 years that I've actually started just trading limit orders and using these zones and being comfortable and confident within my zone. So there is that sort of transition, and there's no right or wrong. It's finding out what works best for you. I've got some clients of mine that actually do trade with limit orders, while some actually still do look for reversals because that's what they feel comfortable with. So there's no right or wrong. It's just what is fundamentally the most important thing is that we're identifying the zones to identify the right areas that we want to be trading from. Okay, so yeah, we've still got sort of 25 minutes. So let's just crack on with a couple more of these levels and stuff that I've got in today. So let's go. We've got euro dollar. Where's the euro dollar? Okay. So euro dollar has been quite bullish recently, both because we've got some weakness in the US dollar, but we've also had some strength in the euro dollar. Bear with me 1 second. Right. Okay. So what we've got here, again, if we look at the ATR, we're looking at around sort of 60 cents, something like that. 60 cents. So we're going to do 30 pip wide zones. Again, divide that by 2. Actually, I think this is actually one I've got on a 1-hour chart. Let me just have a look at this briefly rather than a 4-hour. Yeah, it's better on the 1-hour chart. So we'll look at this on the 1-hour chart. We're going for 24, 25 pip wide ATR. So we're going for about 12 to 15 pip wide zone. You need to scroll out a little bit. And you can see here that we've got a zone around here. So we take it in. Sorry, just let me zoom in a little bit again now. We're taking in this resistance zone and then this touch over here. And again, notice how we've got a really strong reaction all the way down here, a little bit of a weaker reaction, then we've pushed through, but we haven't retested this area yet. So we've got an area which has got 2 strong reactions, and then the market has pushed through and we haven't quite yet pulled back. Okay, so this is an area that I'm still waiting to be retested. Again, so we've worked out that was a 12, was it a 12 pip wide zone? 12 pip wide zone. So the top of that is at 1.642, 1.641. Okay, so 1.642. Get the change this to euro dollar. US dollar, our stop loss, it's about 12 pips wide, so we're going to add 50%, which add another 6, it's 18 pips. You can do 20, rounding up to 20, 1% of our account. You know, it doesn't have to be exact, but in that sort of like, so if your rough pip size stop loss should be 18 pips, then you can use sort of anything from sort of 15 to 20. And again, this is these are guidelines rather than exact. I'm going to use 18 pips, and you can see that it comes out 5.55 lots. Round that up. So I'm going to look at have a risk of 5.6 lots. I'm going to place an order. Buy limit 5.6 lots. My price was at the top of that, which is 1.1641. My stop is 18 points, so it's 1.1623. And my take profit, I'm going to look back towards this swing low here, around 1.1685. Let's do, what's that? If we go 1.1681, that's 40 pips. So that is sort of 2.3 R. So yeah, 40 pip target for a 18 pip stop loss. So it's about just over 2 R trade, 2.3 trade. And again, you can see I'm just targeting back to these other support zones here because there's potential that we could get a reaction from those levels. Again, if we're thinking about zones, you know, that there would be a zone that we could potentially trade from because we've got quite strong reactions from there. So at the moment, that would, if I get down into this area, that is the zone I want to target. Okay, any questions at the moment? Okay, so good question, Emmanuel. How do you calculate less than 1%? Very simple. On this one, and most of them will have it, you can literally just, where it says risk 1%, you can change that to 0.5%. If you press the calculate button, you can see that it goes to 2.8 lots. If you want to risk 0.1%, you can change that, calculate. You see you only need to put 0.56 lots in. So you can, using these lot calculators is a really good way of being able to calculate. You can amend your risk, you can amend your account balance. You know, if you only had a say you only had a $1,000 account and you want to trade 0.1%, okay, you've got to trade, what's that, 5 micro lots or something like that. So yeah, you can change the pip size. You know, you can basically trade it how you can adjust this to your own personal circumstances. Okay. Yep, the recording. Yep, perfect. So Warren, you're saying US 30 and NAS, is that you would like to have a look at those? Okay, so this is actually quite a good question from Lars. Okay, so Lars says, why not trade EU short if you anticipate that it will reach your zone? So it's a good question, but what I'm sitting there saying is, you know, I only want to trade from these high probability areas. Okay, so whilst I'm sitting there saying I want to trade long from this zone, I'm not sitting there saying I think it's going to get down there. I'm saying there's a good chance that it will do because, you know, this is an area of liquidity that hasn't been retested yet. But the high probability is that if it gets to that zone, then I will want to buy it. Okay, so again, it's thinking about probability and it's getting into the mindset that if this happens, then I will do this. Because if I just think, well, it should get down there, if I want to short it from here, I'm going one against the overall trend in the market. And two, where do I have my stop? It needs to be at least above this previous swing high. So I've got to have wide stop, low risk to reward trade against the trend. and there's no guarantee that this is going to come back here. It could just carry on going higher. And then I don't have a trade. But it's better to not have the trade and be break even because you haven't traded, rather than trying to force a trade down against the trend and then taking a loss and then being 1% down. The high probability trade is to show the patience and discipline to wait for the market to move down into that area and then buy it with the trend from an area of liquidity, in an area that I feel comfortable with. So it's not about catching every single move that the market's going to make. It's about finding the right areas and the highest probability trade setups. If the market moves away from me and I don't get that trade, I don't get that trade. There's another opportunity there. As I say, we're not, unfortunately, I think we're going to run out of time and we're not going to get through all of the ones that I've got, but I've got sort of 6 or 7 orders and levels that I'm looking at today. So if I miss, some of these will be ongoing for all week, but if I miss a couple of them, that's fine. There's more opportunities out there. I just need to connect with 1 or 2 good opportunities that give me the highest probability of success. And again, from this you can set an alert just above the zone to notify you when the price moves down into that area, and then you come to the screen to look for your entry signals and your patterns that make up your trade plan. Um, cool, thanks, Emmanuel. Yeah, that's cool. So Anna kindly put the link for that calculator in there. So I use trading view for my analysis, and it shows a percentage. If it comes to my AOI, the percentage is high. It depends. It depends really. Warren, I'm not too sure exactly what but basically you don't want to over risk. If you've got a higher probability trade setup and it fits in with your plan, then you should still be trading that. Okay, so Ferric's got a few questions here. And then I think let's try and jump in and do 1 or 2 more charts if we've got time. We should get at least 1 more chart in. So for London session, from what time till what time is best to trade? Okay. If you're talking about being a day trader, I think the best time, the highest volatility in the market is between 8 a.m. UK time and 10 a.m. UK time, in my opinion. I know some people call it the golden hour, which is 8 till 9. I personally think there's some decent volatility up till sort of like 9:30, 10 o'clock. Some people like trading the pre-market session. I personally don't. When I've sort of back tested, I've found that it can be quite erratic at times. So I would sort of sit there and say for day trading, it's sort of 8 till 10, I guess. What you can also get in the Forex market a lot of the time is sort of quite a lot of fake movements around sort of trading ranges, both in the London session and the New York session, because you get a lot of market makers trapping traders and stuff there. So that's just one little caveat to sort of like to be aware of. What time do you usually trade from London time perspective? So yeah, as I say, so I generally, my actual trading session is 8 till 10, and then I trade from 2:30 till 4 in the afternoon for the US Open as well. Again, a lot of my opportunities can come outside of those trading hours. There was I'll quickly show you a short trade on New Zealand dollar, US dollar, which I was looking at yesterday, which was this area, this area here. You can see that we've had resistance here, broke through, acted as support here, We broke through it, and I was looking for a retest off this zone. So yesterday I had an order in that area, and you can see it's come up and retested that, and that's worked quite nicely. But this happened at about 4 or 5 o'clock this morning, I believe, my time. So I missed that trade. But again, it's like people often ask me, why don't you just leave your orders in? And the reason I don't leave orders in is because One, I don't want to have to wake up in the morning and be checking my positions. I like coming to the charts with a clear head, and not having to worry about things. I don't want to be triggered into a trade and worrying about that when I'm spending time with my family in the evenings. And as I say, if I miss one opportunity, there's plenty more opportunities there. I'd also don't want something to happen overnight in the markets that I can't react to. So I like to be able to be at the screen to be able to react if there's something abnormal that's happening in the market. You know, Donald Trump makes a tweet or whatever. So that's personal choice, that's personal preference. Obviously, as some people may wish to trade differently, but that's my personal preference. For ATR, is setting at default or need to adjust? Yeah, default is absolutely fine for the ATR. Again, it's just the guideline. It's not an exact science. It's a guideline. Previous session, you show your moving averages. At which time frame do you use your moving averages? So we'll go through that. You can use your moving averages on any time frame. For it, they're really just again a guideline, a visual guide. I am going to show you a strategy next week, which I used to use, and I still think is a very good strategy using moving averages within trends. So we'll cover that a bit more next week. They can be used on any time frame. So Emmanuel, as I said, London and New York sessions. I don't trade Asian session purely because it doesn't fit with my lifestyle and my time frame of where I am. Okay, so let's get on. So Emmanuel, there's a couple of other questions there which sort of we sort of really need to cover in other sessions about drawdowns. Uh, you sit there and say, how do you cope with drawdowns, especially when you need the money so badly? If you really need the money so badly, then you really shouldn't be trading, because the problem with that is that you're going to be too emotionally attached to the trading, which is going to make you make bad decisions, and it's counterproductive. So you can't, if you really need the money badly, then unfortunately your emotions are going to hijack your decision making, and you're going to make bad trades and stuff. London pre-market is generally considered sort of 7 o'clock UK time onwards. Okay, yeah, let's get on with another chart, because I appreciate we haven't looked at anywhere near as many as I would like to. So we've looked at oil, we've looked at euro dollar, we've looked at Aussie dollar. Let's go and take a look at silver. This is another trade at the moment which I've been looking at for a while actually. This silver chart. So go to the 4 hour chart. And again, you'll see very similar theme, very similar sort of ideology between my thinking on these trades. So again, looking at ATR down here, we're around sort of 45 to sort of 50 cents. So let's divide that by 2, 25. So we're going to put in a rectangle zone. Here again. Okay, and again, we've got here touch here, strong resistance. Comes back up again, touches slightly weaker, and then price breaks through, doesn't quite retest that area, and now we've pushed higher. So again, this is one of those trades which has got away from me a little bit. I've missed this sort of, it didn't come back and retest it as I thought, but that doesn't mean to say it's not going to come back and retest it at some point in the future. I just need to be patient. What I would sit there and say is, when it takes so long to retest an area, you just need to make sure that the price action is right coming into that zone. You don't want to see some fundamental shift. Something. A lot of this in silver, without getting into too in depth into it, a lot of this silver bullish run has been down to like positive Chinese data. If something happens in China, some poor data comes out, demand decreases, then you could see a spike down. As I say, at the moment, a spike down into this would probably look okay because it would be exhausted into it. But if we started coming down close to it, then I would want to be able to, I'd be just monitoring the price action around that impulsive corrective nature. But again, if we come onto the lot calculator, We want silver vs US dollar. Switch to pips. 25, you're going to divide that by 2. So we're going to, again, sort of 35 to 40 pips. Stop. And it's 2.5 lots that we're going to trade on silver. And again, it's a very simple process. You can either set the alert. To notify you when you're coming down there. Maybe if it's been a while and the market hasn't been retested, then maybe that's what you want to do. So you can come back and just analyze the price action going into it. Or, you, as I say, you can just go in, new order. What do we say? 2.5 lots. It's pending order. Buy limit, 2.5 lots. Price was at 33.75. Stop 33.35. We're going to have a 40 cent stop, we said. And target on this, you know, we can do one of two things. We can target back towards this swing high here, or maybe even back towards these swing lows here up at sort of 35.20. So that could be a really nice risk reward trade. You've got what's that, a dollar, even if we do 35, let's do 35.15, just to front run these areas a little bit. 30, so you got $1.40 for a full, so it's a 3.5 cent, a 3.5 R trade, that one, on silver. Okay, so 5 minutes. Let's answer a couple more questions before, and maybe get one last trade in. Does sentiment play a big role in trading? Well, yeah, it definitely does. The market sentiment in terms of investor sentiment and stuff does play. I'm a big believer that a lot of the market sentiment and fundamentals will play out in the technicals anyway. I believe, obviously, you need to be aware of when fundamental releases are happening, and if you can get a grasp of the fundamentals, it will help your trading. But I'm a big believer that it all sort of plays out. And, like, you know, even if the market is bullish and the market sentiment is bullish, that's not to sit there and say that we're not going to get a retracement into this area and get an opportunity to get long. I think that's the important thing. The market still does have retracements. It still does get attracted to areas of liquidity. In the market, just because the market's sentiment is bullish doesn't mean say every single trade is going to go straight off the bat up or down, depending on. I do trade 5 minutes, Ace. As I say, this I don't trade anything lower than 5 minutes. I consider scalping sort of 1 minute and less. 5 minutes I consider day trading, but I do trade 5 minutes. I don't trade anything less. But this theory works on all of them. The one thing I would sit there and say is the lower the time frame, the tighter your stops need to be. So you really do need to look for instruments with really tight spreads. So you're looking at your major indices, gold, major Forex pairs. You start going to some of the exotic Forex pairs, your spread's going to be too wide and it's going to erode too much of your edge. So in the lower time frames, the lower the time frame you get, the more liquid assets you want to get, the tighter the spreads you want to be trading to keep that edge. Let's have a look at one more opportunity that we're looking at. So US dollar Swiss. This is another trade that we're looking at that I'm looking at today. Where is it? Objects? Again, you can see here it's been support, really strong action. Spent a long time up there, back down here, support again, back down, very minor support before it's breaking through. So I'm looking to sell this zone here. We're looking at ATR. Average ATR is around 50 again, so we're looking at 25 cent wide zone or 25 pip wide zones. And again, so if we get our calculator, again, hopefully you're sort of seeing a recurring thing. I'm looking for breakdowns. I'm looking for impulsive breaks through areas that haven't been retested in the market. So looking for to trade with the trend and looking to exercise the patience and discipline for those liquidity areas to be retested, and then still trading with the trend. So stop loss, again, we've said 25 cent wide zone, so we're going to be looking around 40 cents again, and 1.99, so we can round it up to 2 lots. Again, if you wanted to trade 0.75%, it will adjust it for you. But we trade I trade 1%, so we're looking at a two lot order. Where is that US dollar Swissy? There is new order, pending order, sell limit this time. Oh, not 22 lots, 2 lots. Price. What price did we say that was at? That was at 0.835. We said we're having a 40-cent wide zone, so 0.875. Sorry, 8035, not 8. And then we're going to target back down towards these sort of swing highs here, which is around 0.7995. So that's just a one-to-one risk to reward trade, actually, that one there. And if it was less than one-to-one, I just wouldn't trade it, to be honest. Place that order, and that's done. Okay, guys. So look, we are out of time for this. I think hopefully you found this useful, and you can sort of see some of this starting to get put into practice. Any feedback, please do let us know. Obviously, we'll have the feedback form afterwards. Please do let us know that. I think there is, as long as there's a lot of appetite for this, I think we can run these sort of live trading sessions quite regularly. Obviously, we'll help you view the market in different conditions and stuff like that as well, and actually what I'm looking at. So we can maybe run another live session let's get some more education out there, a few more sessions, cover some more topics, start putting some of the pieces of the jigsaw together, and then we can do another live trading session. But please let me know if you've got any more questions, like final couple of questions, or yeah, and then we can cover from that there. Okay, guys. No other questions coming through. Cool. Okay, guys. Well, look, that's the top of the hour. So again, please register for the next session. Be in 2 weeks. We're going to start covering some trend trading strategies as well. That will be looking at some sort of like patterns, candlestick patterns and stuff, as well as some ways to use this sort of theory of limit orders, the sort of characteristics of things that you want to really be looking out for, and start putting some of the pieces together. So thank you very much for taking the time to be with us again, everyone. I hope you have a great rest of the day. Wishing you all the best in your trading. Hope you found it useful. And again, please do stay on and just fill out that survey for us, that short survey, so that we can really tailor the future sessions to what you want as well. But thank you very much again. Have a great day, and I'll speak to you soon. Cheers.